The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.
Hey everyone, welcome back to another episode of In the Market Trenches. If this is your first time checking us out, I'm Eric Furey. This is the Gary Ribe. We're joined by a very special guest today, Dean Trottier. Before we get into Dean's background and the introduction, if this is your first time checking us out, we're available anywhere podcasts are available. You can check us out at inthemarkettrenches.podbean.com or available on snn.network. You can check us out at the SNN YouTube channel. That's youtube.com/SNNwire. I'm stumbling over myself. I want to introduce Dean. Gary, good to see you in person. Dean, thank you for joining us.
Yeah, thanks for having me. I listened to a few of the podcasts before. You guys have some really good guests.
Thank you.
We try.
We look to add to that today.
Dean, you and I were chatting a little bit beforehand. I'm very confident it's going to be a good conversation.
Yeah.
I don't think we'd met before. If we had, it was maybe in passing. But maybe just tell us a little bit about yourself, your background, your investing style, all that good stuff, and we'll
Sure. So I invest primarily in Canada and primarily in microcaps. I would say 80 to 90% of my portfolio is in Canadian listed companies. It's only my capital that I'm managing, so I don't run a fund or anything like that. I like the same things that everyone likes. We all want these multi-baggers where we can sit and let them grow sort of to infinity for 3, 5, 10 years, whatever that is. But I tend to venture a little bit more on the statistically cheap side when I'm initiating positions. So I have a little bit of a different flavor than some of the other investors you may have had on here that are like really focused on those hyper growth companies. I would say, I have no formal education in finance or business. I'm all sort of self-taught. I've paid a tuition many times over in losses over the last, decade and then some. And so I would say it's not, it's a different style. It's kind of unique. I've come across a few people that have some of the same style, but I tend not to be the guy that's sort of don't worry about valuation type thing, never sell type thing.
You're not a diamond hand kind of guy?
Yeah, I'm not really a diamond hands guy. I'd say my background is in operations, and I grew up in a blue collar family. Both my parents were like they when they were kids, they were poor. Like they came from very poor families. So that's awesome. So I don't come from a lot of money. And so it tends to create a different relationship with building wealth than if you already kind of come from it. So yeah, my background is in actually in blue collar. I started out, after high school as a mechanic, and then I went into heavy equipment. I worked my way through management and operations, and that's when I really cut my teeth on understanding businesses. So while I was getting interested in public market investing, I was running a couple of businesses inside of this organization, or a couple of like smaller parts of this business. And so I was responsible for a bunch of employees and 3 different income statements. And so the two really dovetailed nicely to get to understand like what are the levers you can pull as a business operator, and then what are kind of the things within your control and that are outside of your control. Maybe you can influence them, but they're outside of your control. So the two really happened, simultaneously, and it really I had a really good my growth went from 0 to 100 miles an hour overnight as far as understanding businesses.
Did you find that background gives you is helpful as an investor? Because I feel like one of the things that's useful is to actually just get a micro understanding of how a dollar of revenue flows through the income statement to the cash flow statement and ultimately winds up on the balance sheet. Is that something you sort of saw firsthand with that experience?
Yeah.
Or
Yeah, absolutely. Like, yeah, 100%. I remember back to, when you start kind of looking back to interactions you've had, whether it's at your workplace or someone else's, when you've talked to other business owners, and some people are just really good at a specific job and running a business isn't one of them, yet they happen to own a business, and it's hard for them to kind of, get inoculated with what capital allocation is and everything like that. So yeah, the running the business was really important. I don't think you can really, I think you just have to do that. Like, I'm not gonna lie, I don't think, at least for me, I could never have grasped it as well had I not experienced it firsthand. And the same with leading a team. Like, by the end of my sort of day job career, I was, I had over 60 people like kind of feeding up to me, a couple of layers below, and I had 5 or 6 managers reporting to me. So that type of leadership, especially if you're going through change, and we happen to be in Alberta, we're sort of a boom bust economy. Mm-hmm. So living through a cycle while doing that, and I joke it wasn't that long of a tenure, but it doesn't really take that long for the bust to happen in Alberta, especially our crude oil happens to be landlocked, so it always trades at a discount to West Texas Intermediate. And so we've kind of accentuated business cycles here in Alberta because of that. And so, yeah, like understanding the income statements, leading a team, leading product quality, employee safety, like those are just skills I never would have developed unless I was thrown into it.
So how did you make the decision to manage money, just your own money on your own, to leave the day job behind?
Yeah, like it kind of comes back to, like I was brought up with a very strong work ethic. As I mentioned, like my parents kind of came from nothing. So it was beaten into my head, like you work and save, you work and save. And so I started saving, and then I started looking at like, well, how can I reduce fees? So it starts with like the transition from mutual funds to ETFs. Mm-hmm. And then I think I read The Intelligent Investor, or it wouldn't have been Security Analysis. That would have been too dry to get through. But I read The Intelligent Investor, and that was like, okay, I think I get it. And then I read a couple of Peter Lynch books, and then I was like, okay, this, it seems like something an average person can do. Right. And so I just sort of slowly transitioned. I started buying a couple of companies, and selling a little bit of my ETF, buying a couple of companies, kind of getting a taste for it. And then as like impeccable timing, I'm like, okay, I'm going to do this myself in the summer of 2007, right before the market tanked. So I rode out the bear market with my own, like all of my hard-earned money, like in some of these kind of companies that I'm learning about how businesses work. And so like I remember vividly having conversations with friends being like, how does a bank failing in the States have to do with oil demand here in Canada? Like how, and just trying to like, you learn so quickly how interconnected everything is based on that.
And when you switch from the mutual fund to ETF to individual stocks, did you start in the small micro space, or did you go to large caps and then go down in cap size?
I started definitely in larger companies. And then as I tried to get a handle on them, I'm like, this business, like if you look at one of our like major integrated oil companies here in Canada, there's projects all over the world. Like they all have their different inputs. And I'm like, and that's one of the, it's not a very difficult company, because it's a kind of simple commodity supply and demand. So I was like, if I can't understand this thing, how am I going to understand, a company as complex as like Johnson & Johnson, for example? And then I'd listen to the conference calls, or I'd read an analyst report, and these guys have all these acronyms behind their name, and I'm just some nobody from Canada with a trades background. And I'm like, well, I can't compete with that. So I just naturally kind of went down the market cap until I got to businesses I could actually understand. And I would say now it's the businesses I do own, some of them are not microcaps. They've started as microcaps, and then as they've grown, but I've always been able to kind of keep up with the growth. I've always understood the business as it's grown, but they've started as pretty simple stories, and then they've blossomed, and then my understanding of business has as well.
Very good. So, do you now, as you're here now, do you gravitate towards certain sectors and industries? Is it, how would you describe sort of your style today, and maybe contrast that maybe a little bit with your style at the beginning, and if that's changed at all?
Yeah, I would say I've definitely come to appreciate the companies that you don't have to sort of flip, and try and make your 20, 50, 100%, whatever, and then try and find another one and another one. I like to find the businesses that you can park your money for a while and let them grow. They have to be multiple. The potential has to be multiples of what the opportunity is today, and they have to be run by very high quality management teams. That's really hard to find. Like, you find one a year of those, right? You might think you found more than that.
Dean, you muted yourself. Oh, you're muted again.
Sorry, my apologies. So you might think you find, a couple of those, and maybe you do. I haven't really had any success finding more than one of those really big juicy opportunities once a year, once every few years. I've definitely gravitated towards more growth, and I've been a little bit more, as I've matured, I guess matured is the right word. As I've matured, I've grown towards more, a little bit looser with valuations, allowing allowing more and more of the value to be in the future, and allowing companies to maybe not show negative earnings. They can, but see the potential several years out.
And how would you describe your search process now? How do you find names today?
So I've worked, really hard to find or to cultivate a network where the ideas, usually they don't always come to me. Like, I don't use a lot of screens or anything like that, but I generally have an idea funnel, whether it's through Twitter, through my blog. I'm a member of the MicroCapClub. And so through those, I generally have a couple of things kind of on the watch list or to look at. And then after I look at them, I make sure I'm following them for a while. There's companies I followed for several years I don't own, and I'm just kind of waiting for the right series of events to take place that I may purchase shares in. I may not follow them very, very closely, but I definitely keep tabs on them. I'll get like an email alert when they report numbers, or I'll make sure I meet with them when I'm at a conference.
Sure. So through this learning experience, you started out as a full-time investor in summer of 2007. So I'm sure you've learned a lot of lessons. And I think as we were talking before we started recording, you've paid a good amount of tuition, as we both have, to learn the markets. One of the things that we always ask one of our guests is to share a story of where something didn't work out quite as you had planned. And if you could just kind of walk us through how you found the name, how the thesis evolved over time, the due diligence that you did, and what surprises may have popped up.
Yeah, we find that successes are a bad teacher, so we're hoping to, learn from other people's sort of lessons. We keep inventing our own ways to pay tuition, and then seemingly inventing new. There's a seemingly infinite number of ways you can do that. So we're just trying now.
Yeah, I've definitely got my share of battle scars. I just want to make sure I didn't misspeak. I haven't been full time since 2007. That's when I sort of took the reins of the portfolio, and then I didn't go full time till 2018.
Okay. So
that's just to make sure we're clear on that. So yeah, I've got lots of stories. I've got the typical, overpaying for cyclical companies, I've got burned with the RTOs in China. I've gotten burned with sort of, I think even when I first started, I was it's like trying to trade uranium stocks or whatever was hot, kind of gold or uranium. The one I have, the story that I have is very interesting because it lends itself well to my background. And so it sort of goes to speak how you can utilize some of your skills that that you may not get, that may not kind of quote unquote teach you in business school,
Sure.
to either build conviction or then, you know, subsequently lose conviction. So the company, I'm not gonna, I'll refrain from naming them, but they're a small manufacturing company. They were based, their operations were in California. They had one facility in California, but they were a Canadian listed company on the venture. And so that's fairly typical for some of these orphaned companies in Canada that I tend to stumble
How'd you find this one?
Pardon?
How'd you find this one?
This one I think was posted. It was either, it wasn't a screen. It was posted either someone had sent it to me on my blog, or I had on either that or on Twitter. It had kind of come and landed on my inbox.
Yep.
Sorry, go ahead.
Oh, no, I'm just following along with the story.
Okay, sorry. And so I looked at it, and it had the makings of, you know, a decent investment. They had their earnings were fairly, they were lumpy earnings based on sort of the project revenue or the backlog that was being processed, but they always kind of had a bare minimum of work that they were able to procure each year. And so you would see like the earnings would run up, and then, you know, people would get excited and would trade on multiples of those earnings. Yep. And if that project sort of ran through, the base earnings would provide some stability. And so it was after it sort of rolled over through one of the higher margin profile part of the backlog, and they were still generating cash. And then their backlog had grown, and they had started to announce that, you know, we're starting to see more interest in what was his previous, like, really high margin, high value add, you know, little run of manufacturing that they did. So they were, you know, their customers were large businesses. They didn't seem to have, they had a little bit of customer concentration, but they were diversified across industries and customers. So there wasn't a ton of risk in that standpoint. And the customer relationships had been established, you know, for over a decade. So it wasn't that they were all tied to, you know, something that was temporary. They were growing. Their utilization was low enough that they didn't need a bunch of capital. And it sounded like the potential was there for them to not only utilize the equipment they had, but to start to slowly expand into other adjacent markets. And because they had these established relationships with these very large customers, it sounded like they had the opportunity to sort of dig in a little bit more and provide some more services to those customers. Mm-hmm. So I had traveled to the AGM was about a 3-hour drive from here. And so I went to the AGM. This wasn't where the business was operating, it was just where the AGM was. So the CEO, I don't know if he had a house or he had something here. He would fly in, you know, into Calgary, and I went to the AGM, and he would answer my questions, and I was like, okay, this is a decent little business. He's very receptive, very patient, and I was the only shareholder at the AGM, which is fairly typical, right? So you get well over an hour, you're just poking and prodding, and then, you know, so I purchased some shares. I think I went to an LD Micro, and then I took some friends, and after the conference ended, we went and toured the facility it was in California. And so we toured the facility. They were very busy. Their backlog was at a record. The machines were being utilized fairly well. You know, my operations background in Lean and a little bit of Six Sigma, kind of, you know, there was a couple of things I seen on the production shop floor, and I was like, you know, this isn't as big of a business as I was used to interacting with where I was working. And so I was like, well, maybe I can kind of forgive some of these things. You know, really the business is humming along. They're getting new project wins. they're executing well, their backlogs at a revenue, their profitability is getting better, and it's not high fixed costs, but once the fixed costs are covered, the incremental dollar just goes almost right to the bottom line, right to the operating margin. So then, I was fairly happy. As time went on, they kind of, I wouldn't say they missed numbers, they just missed my sort of expectations for the next few quarters. But the backlog and some of the forward-looking measures, they were all there. So I didn't sell anything. I continued to, I'd call the CEO after every other earnings release and kind of get caught up on the business. In the meantime, there was some yellow flags, like the CFO had left. There's another company that that's in the same the same building as them. Was sort of like a side project that was supposed to get to commercialization of one of their products by now, and it never happened. And so they still were kind of helping them out more than I thought was appropriate.
Was it a side project? You mentioned it was a side project. Was it a related party transaction? Or?
Yeah, it was. And some of those things, like, they're fairly common in MicroCap, and it's not like there's a hard and fast rule for me. It kind of depends. Everything is looked at with open eyes. So if you can tell the egregious ones and you don't even bother, but some of them you're like, well, I can see, this relationship dates back to when the company was founded. This side project, this individual, they both kind of started at the same time. It was minimal capital required. Mm-hmm. And then you're like, okay, well, now it looks like we're kind of skimming some OpEx. Maybe we're sharing some expenses. I don't know if this person or this other company, it only had a few people. Like, I don't know if they're paying the appropriate amount of rent. I don't know, and so it what was promised to be sort of, when they would cut the umbilical cord was just not happening, or definitely not happening at the cadence I wanted with my capital. And so I happened to be back in California. I went and toured the facility again, and it was just me this time. And so I started kind of asking some, I wouldn't say they were, like, to me, they weren't harder questions. They were just questions an investor should ask, right? They're like, hey, you've got this company over here. What is it contributing? I'm all for, small controlled experiments with the balance sheet. That's completely fine, especially if the payoff is like a lottery ticket. But, when does that kind of get cut? And then at this time I went and I seen the facility being utilized a little differently. And the backlog was still I don't know if it was quite at a record, but it was very high. And the CEO was like, well, we need to purchase more machines. And so, I went into the facility and I'm talking and I'm like, well, I don't know if there's 25 of these things. They'll have a little bit different uses. So it's not that it's a 1-for-1. And I'm like, well, I'm like, hey, I walk around here. I see 20 of these things. I don't know all of the specifics, but I only see a few of them being on right now. Like, what, I understand it's kind of in the evening. Like, maybe, like, would it be better if you just ran another shift? Would it be better if you, like, why is that one sitting there? And they take a while to kind of set up for the production run. So it's not like the interchange is like, we stop, we just sliding another product and go. So there's that element too. But again, the answers I was getting were the more I kind of poked and prodded, the less and less I liked what I was getting in return. So it was like, I'm like, so that
the dots weren't lining up, huh?
Yeah, like, and it's
yellow flags became red flags.
Yeah, and and so all, like, very quickly I went from, I wouldn't say it was like a cheerleader of the business, but I went from like a big supporter and a big believer. I left there and all of a sudden, like, I just did a 180, and I didn't go and I didn't just dump the stock the next day. I kind of waited, I slept on it, I kind of revisited it in like a week, and I'm like, what is now my best case scenario? What is my probable scenario, and what is my downside? And then when you're putting your capital to work, it's like, who are you partnering with? The last thing I want to do is wake up on, and go go to check the markets on Monday morning and find out and get a news release for something. I'm like, what? Where did this come from? So like some of the questions, I was like, so that machine over there, why isn't it working? What's it working on? And they'd be like, oh, we're waiting for a customer to come in and do a quality check, which I completely understand. I'm like, okay, well, when is that customer? It's a very high profile customer. When is that person coming? Well, they were supposed to be here last Thursday. And so this was now like the following Monday. And I'm like, okay, so like, is there, like, how does that work? Like they promised, they were going to be here on Thursday. Things get delayed. I understand that. But like, you're now talking about having to buy, several $1 million in equipment and they wanted to lease another space to put this equipment because this place was jam packed with it. So I'm like, your incremental costs are huge. Like, so what is the consequence for that customer? And people are rational. You're not gonna send them $1 million fine for a few days late. But there should be something built into the agreement, in my opinion, that says like, well, if you are late more than this amount of time or whatever, we have a business to run, and we need to either not necessarily charge you, but then we're going to change out the equipment and we're going to run another product through there, and you're just going to have to wait for that delay or something like that.
Yeah, there's a consequence.
Yeah, like and it's, I don't think that's unreasonable. And I like to think that if you give people the benefit of the doubt, and if you build that sort of into your relationship as a relationship goes, people are generally willing to work with you, like understanding this product was a very small cost that they were supplying to the customer, the finished product. Like we're talking not even pennies of the dollar, like just a micro cost is obviously very important, and it has a very high quality standard, but it's a very small cost. And this company was carrying some of the working capital for their customers by doing this. And so when you start to kind of, from an operational standpoint, when you start to think of, I'm stuck with however many 25 of these machines, how can I align my sales and everything to best utilize the equipment to drive as much to the bottom line and add the most value to the customer? Because also you don't want your customers to wait. If you can turn around your product in half the time, like why wouldn't you, right? Like maybe you have some things in a stock program, especially if they're constant repeat orders, and your machines are sitting idle. Like why wouldn't you have a little bit of a sort of strategic inventory buffer? And then as well as when you're sort of tooling up the equipment to run the production, like how do you look at that and get it like as quick as possible? Maybe if there's repeat orders, maybe some of it's just always dedicated or tooled up. And so when you started to ask those questions, and then, I was asking about, because I didn't have, I didn't go to university or anything like that. So I don't have a business background. And I was asking some of the I learned about this sort of lean manufacturing concept, and this reduction of waste, and this concept of downtime is waste, over processing, that's another form of waste, not having the right sort of maintenance schedule for your equipment. This is all waste that's in your process, or that can be in your process. And it was just met with a lot of resistance. Like, I don't need some academic to come down here and tell me how to run my business. I built the business from zero to this, out of my basement type thing. And it was a lot of kind of pushback. And I don't go in and tell people what to do. It's really just me asking questions. The last thing I don't know that business. I don't know the customers. I'm not going to tell them how to run that business. But it was just when you started asking the questions, you could see like, it got more and more guarded, and quite quickly it was just sort of dead silence between the two of us. And so yeah, that was like, it wasn't like a 20% position for me, but I think it was close to a 10% position at the time. And so it was a fair bit of capital. And again, when you start from zero, like I did, I didn't have a big handout or anything from my parents. Everything I have is very hard earned. So you really think about your capital and your losses differently. They really scar you. And so I ended up, like I said, I waited a little bit, but I ended up kind of selling my shares slowly and gradually over the next quarter. Yeah. And I ended up, I think because I had purchased sort of on those trough expectations, I think I ended up making a little bit of money, but not shoot the lights out multi-bagger, the stuff that we all take victory laps on Twitter for.
It's too funny. We try to stay away from victory laps just in general, because I think they just line us up for maybe bigger mistakes going forward. We don't I don't think we largely invest in any small manufacturers like maybe we have in the past, but like with a customer, like, do you find with those types of investments, the company, their customers are basically dictating terms to them and using them basically to offload their CapEx and working capital, and sort of, it's sort of gonna be what it's gonna be? Like, is that one of the lessons from this, or is that, and do you still invest in companies like this? And then, what's the postscript? Because it sounds like there were yellow flags that might have been turning red, and maybe something happened.
Yeah. So to kind of answer your first question about, are they sort of dictating terms, and it just is what it is. There's definitely a piece of that. I don't know if that was the entire business for this specific company.
Mm-hmm.
But yeah, as I've grown as an investor, I've started to realize, business quality and who's kind of driving the bus as far as pricing goes. So there was definitely a piece of that. And when I had said, like, that customer is waiting, or we're waiting on this customer to come and do some sort of a check, that was probably the case with that specific customer. Mm-hmm. And so, understanding it is what it is very critical. Those are businesses you don't really fall in love with. It doesn't mean they can't generate a nice return, and they can't sort of offset some other portions of your portfolio when you think of it from like a portfolio construction standpoint. Mm-hmm. The other thing with that business, when I purchased shares, I had the added margin of safety as it wasn't a net, but they own all the real estate. And so, like, had they really gotten stuck, had they just sold the real estate, it was worth more than the market cap of the company. And it was listed as, I can't remember, it's listed as fairly negligible on the balance sheet. Right. So that gave me a little bit more comfort. And then, like, what did I learn? Understanding the business, it is what it is. And then if they are a product company or something like manufacturing, really getting to see for myself, because of my background, I think adds another layer of conviction. And I think I do have investments that are similar. They're not usually the core of my portfolio, but I've definitely gone up sort of the quality chain when it comes to those types of businesses where the product they're supplying is very, it's very specialized, it's very critical. It requires a lot of sort of technical expertise. Mm-hmm. And so I've gotten, I guess that's sort of what I've gotten out of this, where I don't just try and find, who's providing the cheapest widget for a bigger manufacturer, and just, like you said, carrying their working capital and their inventory for them.
Right. And what was the postscript to this story? So you slept on it, you kind of wound it down. You sounded like there was a little bit of smoke. Was there fire?
Yeah, so, like, very interesting. The CEO ended up leaving the country, and they had a new CEO. They merged with another business that has operations all the way on the other coast. And so the CEO left, and they had to, he had borrowed money from the business, and they had to, I don't know if they had to seize property or something like that. So the lesson was, like, really the business quality, but then really be careful who you're partnering with. The MicroCap land is like the Wild West. And so you have all of these opportunities, but you have potential governance issues. You could have, like, nepotism and stuff like that. So you have to be really careful who you're partnering with. And I think, letting, we've gone through this kind of weird time in the markets where we're all, stuck inside and we're all looking at our screens more frequently. And so like the share price going up doesn't necessarily mean that you've made a good decision. Really, like if your thesis is X and the share price goes up, but X doesn't materialize, you may get wealthier, but you may not have actually done the right analysis of the business.
Yeah, that's why we think success is such a bad teacher. And I think Annie Duke calls what you're talking about resulting, where you're evaluating what happened based on the basis of whether it worked out or not, and not the process that produced the result. So that's, do you find that with the smaller companies, it's sort of easier to identify sort of the nepotism and the self-dealing and the related party stuff?
Yeah, I would say it's easier. I don't know if it's more or less prevalent than as you go sort of up market, but it's easier, and I think it's a little bit easier to get a read on the integrity of the individual rather than someone who's like, my first AGM was with in Canada, we only have like five big banks, and then we have a couple of smaller ones. And so my first AGM was with a multi-billion-dollar bank, and so you could easily see the sophistication, especially when interacting with investors, was very high for this individual. And you do see that in some of the microcap names, but generally you're seeing people that are a little bit more, I'd say not always easier to read, but the signs are there if they kind of get it, or if they don't get some of the capital allocation stuff. And like, I've got some stories of like some, just some, they're not wrong. They're just kind of cringy moments where you're at, when you're interacting with the CEOs. And I listened to one of your guys' podcasts on like some of the conference calls. Like I remember on one of the conference calls that in one of the companies I own, like every quarter is like, hey, here's the results. It's still like not great. And people would just get on the phone and they would just yell at the CEO. He would just take a laugh. And he would be like, yeah, I'm working on this. We're going to do this. And, I understand like there's all this cash on the balance sheet. I'm putting it to work. And, people were like, why aren't you buying back your stock? Why aren't you doing this? And he would just say like, this is the plan. The board hired me for this plan. This is what we're doing. And it was probably like, I don't mean it was one bad quarter. I mean, like this was like 6 quarters where he would get on and like it took so much time. And he has executed exactly what he said he would do. The timelines are a little bit different, and some things happen here and they needed capital sooner, but like they've turned the business around. It's a completely different business, and he's had very good professionalism throughout it. He was very patient. But like that's what you get in microcaps. Like in this, I don't know, like the poor guy, like every quarter, but he won. He did what he said he was going to do, and he's done very well.
Let's take a little detour. We're going to have a new segment on In the Market Trenches called Cringe Corner, and I want to hear about the cringiest story that you can share with me.
Well,
I'll keep.
You don't have to name names, just
No, I'll try to
picture for us.
Because we've had a few cringy moments ourselves over time. And,
yeah, I think like the CEO getting yelled at. I've had a few. We've had a few. Like when you get into some of the microcap names, there's a lot of promotion, right? And so it's funny. This one company that I'm thinking of, they've actually done very well. But the CEO, we sat at the table at a conference, and it's one of the 20-minute kind of one-on-one meetings, but it's a group of us.
Yeah, you go to the table, right?
Yeah, it's like five of us, and this company, they're performing fairly well. And the CEO, like, I don't know if he was like having a lot of energy drinks or whatever, but he's like super energetic. Like he's just like he's almost like, he wasn't panicky or anything, but he was just like so overstimulated. And he was like, and I know anyone that's enough people will figure this one out, but he was just like, he was so intense and like laser, like right in your eyes, so piercing. And he was like, and if this goes through, we're gonna make an F ton of money. And he just was like, we're gonna be on the Super Bowl, and and it was just like, was so intense. And I'm like, hey, and you know, at these conferences, like after the few days, like your bandwidth is taxed, right? You're like, you're a little bit fried. Like you're kind of just like trying to grasp all the things in real time. And he was so intense with it. And I just remember being like, okay, like if he can operate this, like he's absolutely right. I never took a position on the shares have done very well, and he's executed quite well. But like it was so, I don't know, it caught you off guard because everyone else is very slow. And sometimes these CEOs are so like they're timid because they've had a bad experience. So they're so guarded on what they say. They're very like, it's like, oh, we don't know. We don't provide guidance. We don't. And it's like, well, look, I'm not asking you for like, what's your gross margin next quarter? I'm asking you like, what do you think in 3 or 5 years this business could look like? I don't want you to tell me what your EPS is going to be so I can put it into my model. Like I'm long term here. I'm thinking like, you know, what can this potentially be? And
what's your business model?
Yeah.
Right? Like,
what do you hope to do here?
Yeah, and you know, like you don't go into microcaps because you want like, you know, a 6% dividend yield to pay for your living expense. You go into them to grow your wealth, right? And so I've had another few where it's been I can't remember the company, but it's like, hey, you know, you said you bought this business or you've gotten this business at like some absurdly cheap multiple. Like how? Like this is like in the age where we're more connected than ever. Like how are you? Like what are you guys doing?
Was that the quote, Gary?
So we went to some conference and we had some food distributor company that bought like a really sexy like meal kit delivery business of some variety, and they were like bragging about the great price they got. And this is before, you know, 1 or 2 of them went public and whatever else, and like the VCs were just throwing lots and lots of money at these things. And me being that guy, I stayed up in the middle of the room and I'm like, so this was a good price, right? And he's like, oh yeah, it was a fantastic price. And I was like, can you just explain your good fortune to me? And they couldn't do it. It was just like, it was.
We did an episode about this, and it was like, about this. Yeah, I mean, everyone in the room is kind of high-fiving each other, like, "Yeah, we got a great price. We got a great price." Meanwhile, I'm looking at Gary like he just invented fire, and I hear the CEO's response is like, "I can't get out of this quick enough." Like,
yeah, and what's not said or the shift in body language, that's the due diligence you're after, right? Because you can put whatever through the 10K and the 10Q, but it's that interaction. You're like, that doesn't quite, these don't add up to me. Similar to that, like, why are we going and buying new equipment and getting all of this, you know, adding all these expenses in this machinery when we have all this idle equipment right there? Like it's right in front of us. Like understanding there may be things outside of your control, but have we pulled all the levers for this business right here, right now on the margin? Have we executed that? Yeah, there's been a few, like the conferences are fun, but then the socializing and networking adds a lot of value, and getting a couple of candid questions in is huge.
Yeah, we're looking forward to getting back and maybe meeting some people again soon. I mean, I don't know what soon means, but I'm tired of being cooped up. That's hopefully we can get back on the road and get some new stories and some new cringe moments and meet some new people.
I like the cringe corner. That's really good.
Yeah, in MicroCap, there's like no shortage of it, and like, you know, I can see. Is it a good assumption that you like to meet and talk to all the managers of the companies that you're involved in?
Yeah, at least if it's something that, especially if it's not well followed by anyone on social media or the MicroCapClub or anything, then yeah, I don't have as many people to sort of bounce the idea off of with. So I definitely like to meet them in person, especially if I'm one of the people that's more interested in it than the others.
Yeah, I mean, since they're less polished, I think it's easier to get a handle on if there's something untoward going on. Yeah. Although we've been fooled once or twice, so you know, it's I feel like with the big companies, I don't feel like I have such a need to talk to people there. I feel like you can, you're going to get polished answers anyway, but with the smaller companies, you really got to do it.
Yeah. I like I've had a few, like you had mentioned the food distributor, like I don't know if it's the same company, but like I've had where
You might
like
Likely.
is, but there was a few times where it was, it's really the person's character. And so, it's like, okay, we've bought this new like health food line, and it's like the CEO is like, are you a believer in the product? Like, would you buy this product yourself? Like, we've all, especially after COVID now, we've all got some weight to lose, I guess, but like, are you a believer enough in the product that you would purchase it personally? And, why, if not, why not? As well as when you sort of ask questions about competitors and their positioning and their behavior. And then if you watch the response in the CEO, if it's very combative and it's very defensive on like, well, everyone else, all the other businesses are run by idiots, but I know what's going on here. I know. And when they kind of give answers like that, it speaks a lot to the character. And again, it's like who you're partnering with. You don't want to wake up to a sort of an unexpected private placement when you didn't think there was going to be one. And I was thinking about that acquisition story sort of as I was telling it, like any company that I've had where acquisitions have been a big part of the thesis, they've never been at like these absurdly cheap multiples. They've always been at reasonable multiples with a well thought out thesis on like whether it's pre or post integration, or whether it's like we really want the people, or we really want this product, or we need this international distribution to sort of sell our product through. It's never been, everything else has been sold at 5 times revenue, and we managed to scoop this little thing up at 1 times revenue.
Yeah. Right. We've been involved in a few different like NOL shell type vehicles where acquisitions are part of the strategy. And it's funny, we look at some of the deals that these people are wind up doing, and we sort of just scratch our heads wondering if they're looking for things at the low multiples or whatever. And maybe that's the kind of person who gets control of an NOL shell. I don't know, but it doesn't strike us to be the wise. Are we involved in anything else that we're acquisitions are part of the strategy? Really? I don't think so. Or I can't think of anything off the top of my head. Just the NOL shells where that's normally the case, right?
Yeah.
Yeah, and we're sort of recovering NOL shell people, so we don't do as much of that as we did at one point. So, yeah, interesting. Yeah. What else do we got?
I think it's pretty good. Dean, we really appreciate you being on. I appreciate the story. It's great. Like I said, not sure if we've met before, but it's great meeting you and having the conversation. Where can people go to follow what you've been up to lately and see some of your work?
So I have a blog. It's called Petty Cash. I'm sure I can send it to Bobby and he can link it in the show note. I'm also on Twitter. My handle is Petty Cash with 2 underscores between petty and cash, because the other one was straight petty cash was taken. And like I encourage people to reach out. I'm fairly open. Like I said, I don't have a traditional background in business or finance, so I tend to be a little bit more open with what I'm doing in my process, and even some of the personal finance stuff, as I've made the switch from having a typical day job to being a full-time investor.
Awesome. Great. Well, thank you again for coming on. For anyone that's tuning in, we're available anywhere podcasts are available. Check us out at inthemarkettrenches.podbean.com, snn.network, or the SNN YouTube channel. That's youtube.com/SNNwire. Dean, thank you again so much. Really enjoyed the conversation.
Thanks a lot, Dean.
Thanks for having me.
The information in this podcast is educational in general nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.